So, today we're diving into this really fascinating clash in the world of Bitcoin. You've got this huge, world-changing prophecy from a really famous author on one side, and then on the other, you have the messy, confusing, day-to-day reality of its price. The big question is, which story is closer to the truth? Let's get into it. We have to start with this quote from Robert Kiyosaki, the author of Rich Dad, Poor Dad. I mean, wow, this is not just some market tip, right? This is a whole worldview. It really sets the stage for a dramatic long-term argument for why assets like Bitcoin aren't just for making a quick buck, but maybe even for financial survival. Okay, so what in the world is behind a statement that bold? Well, it all comes from a pretty dire warning he has about the entire global financial system. Let's break down what exactly he's seeing on the horizon. Now, the power of this prediction is in the details. Kiyosaki isn't just vaguely saying, hey, things look bad. Nope, he's pointing to a very specific trigger, the end of Japan's carry trade. Now, this is a strategy where big-time investors borrow money super cheaply in Japan to then go and invest it in higher-yielding stuff elsewhere. He thinks that when this finally unravels, it's going to set off a massive domino effect. Liquidity just evaporates, confidence in traditional currencies tanks, and bam, a major correction across pretty much all global markets. But, and this is a big but, here's the twist. For Kiyosaki, this is not some doomsday scenario you need to run away from. He actually frames this huge potential crash as a historic, once-in-a-lifetime opportunity for anyone who's prepared to make the right moves. And here's the game plan he's laying out. He argues that as people's faith in paper money starts to crumble, all that capital is going to flood into hard assets. And he's constantly pointing to these four. You've got the old-school safe havens of gold and silver, right alongside what he sees as their digital children, Bitcoin and Ethereum. He literally sees them as life rafts in a coming currency crisis. So that's the grand long-term vision. It's a really compelling story, but it slams you right into a very sharp, very immediate question. If Bitcoin is supposed to be the future, why does its present look so, well, uncertain? And that brings us to the second half of our story here. We are shifting gears big time. We're moving away from prophecy and diving right into the hard, cold data from the charts, where right now Bitcoin is locked in a really tense battle. All right, here's our anchor point. As of late November 2025, Bitcoin's just kind of hovering around $90,600. And look, that's a huge number for sure. But the real story isn't the number itself. It's about where that number is stuck. What we're seeing right now is basically a price trap. You can think of it like a room. The ceiling, what traders call resistance, is at $98,183. Bitcoin's tried to break through it, but keeps getting knocked back down. Now, the floor, or support, is down there at $88,000. If it breaks through that floor, well, we could see a much deeper fall. The price is literally being squeezed between these two critical levels. So let's look at what the charts are telling us. And, this is where it gets really tricky. On the one hand, the price is sitting below a key technical marker, the 38.2% Fibonacci level, which gives things a slightly bearish feel. It's also consolidating, just coiling up, which often means energy is building for a huge price move, a volatility squeeze. But then, on the other hand, the data suggests this isn't some mass panic selling. And the miners, the people securing the network, they aren't giving up yet. So the signals are totally mixed, painting a very, very unclear picture. And to throw another layer of complexity on top of all this isn't happening in a vacuum. November 2025 is actually on track to be one of the worst Novembers for Bitcoin in years, down about 18%. That's right up there with the drop back in 2019, and it's a pretty stark reminder that even in a big bull market, you can get these absolutely brutal corrections. So what happens when you smash that powerful long-term prophecy together with this messy, contradictory chart? Well, it brings us right here to our final section, the great standoff that the market is stuck in right now. The research firm Matrixport calls this a rare zone of impasse, and I love that phrase. It just perfectly captures this feeling of being completely stuck, where all the different forces, sentiment, the news, where people have their money, have all just converged into this moment of total and complete indecision. And this is the perfect illustration of that conflict. It's a classic tug of war. The bulls, they think the recent drop was a good thing, a healthy cleanse of the market. They're pointing to this candlestick pattern called a bullish hammer as a sign that the bottom might be in. But the bears? They're pointing to that terrible November performance, the thinning liquidity, and just plain weak demand. And the crazy thing is,
Both sides have a really compelling argument. And here's the key takeaway from all this. While the market looks quiet, maybe even boring on the surface, underneath, something is brewing. Traders are placing their bets. This period of quiet compression is not going to last. It is the calm before the storm. But nobody, and I mean nobody, knows if that storm is going to bring a surge up past 100,000 or a slide down towards 80. And that leaves us with this final, really fascinating question to chew on. When you've got this massive long-term prophecy clashing with a deeply uncertain present, what's the right move? In this great standoff, is the real risk in betting on the bulls or betting on the bears? Or, just maybe, is the biggest risk of all simply sitting on the sidelines while the market gets ready for its next explosive move? That's the dilemma, and it's right at the heart of Bitcoin today.